Hello everyone, K Kim here. Today is November 15th, 2017, Wednesday. Welcome to the market update. This is going to be a quick midweek update, and we'll do a little bit longer version this Friday. But what I wanted to update you guys today, this Wednesday, is this level right here. We've been talking a lot about, if you've been following my video, I've been talking a lot about how we're going to see some volatility throughout November, a lot of shenanigan, gap ups, gap downs, intraday, up and down movement. That's kind of what we saw here. And also, if you recall on the last market update video from, Friday or Saturday rather, we talked about, as long as this gap remains open, it's gonna become a little bit hectic for the buyers. If we don't get this gap filled, I think last time was what day was that? That was 10th. So yeah, so this was this day right here, right there. So so it was right. So if this gap doesn't get filled right away, if we just kind of start to fizzle around, things probably gonna get hectic, and we talked about how it's probably gonna come back, retest the 20, possibly coming back down to retest that rising channel pivot. So was not able to fill the gap on this week. We open here, right? Monday, Tuesday, Wednesday. We open gap down, pretty much gapping down every single day since last Thursday or so. Gap down, got up, gap down, got up, gap down, and then came all the way down, but got back up, gap down again today, all the way down, kind of went back up here. So we're seeing a lot of dip buyers that show up, but it's been gapping down every single day. Generally though, when you see these kind of gapping down moves that are met with kind of a buying the dip activity throughout the day, it is considered bullish in the minor term. And we can see that I'm going to go to actually my oscillators on the intraday chart, and I'm going to explain to you guys. Before I do that though, I do want to talk about how this is going to be the important level here. You can see this is a level that this is a strong pivot. What I mean by strong pivot is this was a strong resistance in the past, and then it became pretty strong support as of late, right? Today we're hanging out at that vicinity, and then back in October 24th, 25th, we saw that dip buyer come in. This is a level that coincided with that 20, and then you can see 1, 2, 3, about 2 weeks of bullish move, and then coming back down, retesting, and that's exactly kind of what I was expecting to see. That this would get up, breakout, and then kind of come back down, gap back up, and then starts to really retest this level, kind of retesting a couple times or several times, potentially be some kind of a consolidational phase, kind of digesting its gain before getting back up. So generally what we're seeing, the recent price action, there's nothing peculiar about it, there's nothing weird about it, there's nothing shocking about it, there's nothing like abnormal about it. This is what it's gonna, the market has seen some good bullish move since kind of mid-August, late August, and so this is kind of very, very normal that after breaking out of this channel, because it has been bound by this channel for quite some time now, right? It has been bound by this channel since March, and it's been in this channel for 6 months or so. So we finally broke out after kind of bullish move since August, mid-August. It's not shocking or surprising to see that the price is going to start to kind of digest its gain, maybe reset a little bit, and then start to retest that rising pivot level once again. So but I think going forward, it's going to be this channel resistance is going to be important. I think as long as we can hold that level, I still want to give a benefit of the doubt to the buyers in the minor term. Okay, so as long as we stay above this level, I want to give benefit of doubt to the buyers. Even if we lose that level to the downside, we do have a 50 MA kind of hovering around in that vicinity at about 253. Keep in mind also, this is a bull market, very strong bull market. if there's going to be any kind of trap, there's going to be more a bear trap than a bull trap. A lot of bears probably going to say that, oh, that's a bull trap, maybe coming right back down. It's a possible, anything goes in the market. However, there will be more trap that is set for bears where it's going to come back down. It's going to make it seem like this is a bull trap, and then, you know, people are start exiting their positions and maybe going back short, and then it takes and then market completely reverses on people and then just thrive. And so we've seen that kind of stuff happening pretty much all year long. I even made a video on it, but anyway, so definitely this is a level to watch. We got these gaps now, several gaps. As long as these gaps remain open, some hectic environment is gonna be continuing throughout this market. You know, like I said, since late last month, that November is gonna be pretty much consolidational, kind of this minor term up and down shenanigan volatility month. And I don't forecast seeing a whole lot of move throughout this month, especially we got Thanksgiving coming up next Thursday. So probably not a whole lot unless we see some kind of a strong gap up, continuation, confident type of candle. But if we start fizzling, we're probably gonna hang around here. I want to show you guys this here. This is 65-minute chart of this is not what I want to show you guys. 65-minute chart of Russell 2000. You can see so each candle represents 65 minutes. We have, this is what we call minor term, micro term, bullish divergence. Same thing happened here back in, what is this? This was back in, you know, when was that? September, August 11th. You can see lower low, higher lows on the oscillators. And then you can see that 50 MA, right? That 65 to 50 acting as a resistance, and then it flipped back up, start acting as support, and that bullish divergence got confirmed, and that would have been a good level to accumulate some positions, right? Well, Russell 2000, and if you are really heavily on a confirmation, Russell 2000 right now, what's happening is we got that 50 MA coming down. We've been kind of trading all around it, and then finally lost it, and then now you can see that we still are in a minor term downtrend. Right, so the price is hitting near to that, and then falling over. So we have cultivated lower lows on the Russell 2000 ETF on this 65-minute chart, while oscillators giving us higher low and higher low. What does that mean? It means there's some accumulation happening here. People are buying these dips. That's what we're seeing, this accumulation. So if we see a price action start to get up and start to see that 65 minutes or 50 minutes start to move sideways and start to curl up, and then that 50 minutes starts to support the buyers, then I think that's when it's going to be a turning point for the Russell 2000 there. Let's actually go to Russell 2000 real quick right there. So we actually came and filled this game. Remember, I don't know if you guys remember, if you recall, last week's market update. I'm going to adjust this real quick, but I talked about how it's just everybody's looking for this. Everybody's been looking for this dip, right? Because a lot of people missed out on this parabolic move. So a lot of people were looking for this dip, and a lot of people are starting to buy this dip. This is a reason why what this is happening, right? And this is a good level to buy as long as you have some patience. If it's almost not a day trading this, or just couple day trading, if you have some patience with it, this is a good level to buy the dip. And so, but again, we have filled this gap, so that's a good sign. A lot of times the gap gets filled, that become a strong support. So we did that. That's a level we are coinciding with what I have adjusted this kind of a little bit, but it's still in that vicinity is a good level, right? So we got the rising channel resistance, or holding that level. And also, if I throw a Fibonacci here real quick, that's the level coinciding with that first level of Fib. So we got the 100 SMA kind of in that vicinity. So you can see you saw that 65 minutes bullish divergence forming here. We got the 50 MA hanging around here. We got the 100 SMA in that vicinity. We got the prior resistance, new support type of deal going on, and the first level of fib. So this is kind of a lot of level. This is many technicals are colliding in that vicinity. So I think this vicinity is a good level to buy the dip. It's just that it's probably not going to be a smooth transition unless we see a strong bullish follow through. And like I said, you know, last video, last Friday, it's probably gonna give you some shakeout. You know, just stir up some weak hands. Somebody who's too short term or micromanaging this, let them get, you know, taken out before this thing makes another move here. So let's see if we can get something going on to the upside here. We got some good looking candles so far. So let's see, we haven't seen follow through. We've been seeing some, you know, dip buying opportunities or dip buying activities, but we haven't really seen anything that has any follow through. So once we see a follow through to the upside, you will see that 65-minute chart bullish divergence confirming, and watch out for that 65-minute chart bullish divergence or that 50 EMA on that 65-minute chart before this thing starts to make move to the upside. I want to kind of check Apple here real quick. What I noticed about with today's move is we have island reversal. You can see that this is island right there. That's because we got the gap up and then gap down. That's a textbook island reversal after giving us multiple kind of these highs here. I mean, technically that's higher highs, so we're still in an uptrend. So that's still a good sign because we are cultivating higher highs, so not moving sideways. We didn't cultivate lower highs. But what I'm kind of concerned about is it is kind of starting to a little bit remind me of 2008 here a little bit. You got the high, you got the higher high, and then we started to move higher, and then you can see you saw that gap right there. So that was kind of like an island reversal. Also, you see that gap right there, and then there's a little bit of gap right there. So there was a gap up. There's a tiny one, but there's a gap up there. Again, I'm no way right now saying that this thing is going to tank like it did in 2012. But at least there's a gap up. There's a gap. Then that was island right there. Let me just kind of annotate that real quick right there. So that was island reversal, and that made things hectic for the buyers. We don't have any strong bearish divergence today, not like we did in 2012. We don't have that. We did have that before, and then it's starting to get nullified, which I've been talking about. But as I look at this now, bearish divergence is still kind of there, but it's not potent right now. It's just kind of, you can see, where's my, let me get my MACD here. Where'd it go? There you are. Let me get rid of these. So, it's starting to kind of nullify that bearish divergence. You know, it's a little bit, and kind of weakening that bearish divergence. Back in 2012, just monster bearish divergence. You see how strong that bearish divergence just tanked, you know, and that all kind of started with, you know what, I want to put in RSI too, actually. Yeah, that RSI definitely. But here we still kind of have it, but it's weakening. Doesn't mean it's still there. It's weakening. So let's see how that plays out. But that island reversal definitely cautionary signal in the minor term, I'll say. But I still want to give benefit of doubt to the buyers as long as we're still staying above some of these moving averages and we're cultivating it. But I think it's things starting to look a little bit hectic here for the minor to intermediate term buyers on Apple. So that's all I got. We'll talk more on things on Friday. Have a wonderful Wednesday. Rest of the Wednesday evening. Good luck trading next couple days.